Felix, and good morning to you. In the next few minutes, I'm going to walk you through how one stock just tanked the stock market. Number two, why the job shock may be a blessing. Number three, why the GDP number, those recession fears, are fake news. Seriously. And then I'm going to show you how you actually spot buys in this falling market. Where is the opportunity in this dip? And why it might pay to be somewhat bearish, at least in some sectors. We look at whether stocks like HIMS are still a buy here. Of course, we look at SoFi, Palantir, NVIDIA, and all the other favorite tech stocks out there. That's really my mission over the next few minutes. And of course, Winston soon to be as calm and happy as that guy back here. Right, Winston? He's just meditating on the market this morning. So let me share my screen with you, and we'll get straight into it. Here we are, as they say in France. We're going to walk through this. How one stock tanked the market, the job shock here, the GDP numbers, really understand them. Like mainstream media is telling you complete nonsense. I want to see in the chat here already, people are buying the mainstream media noise. You won't be in a couple of minutes. How do we spot good stocks here? Why it might pay to be bearish. We look at stocks like HIMS, SoFi, Palantir, and everything else that you want me to know. Put your questions in the chat. If you would find those 7 things useful, put a 7 in the chat. And I know that you're actually absorbing this. You're getting value out of this, and we'll put more content out. Just like it. My goal is always for these mornings to be a bit like the sort of briefing you'd get if you were working inside an investment bank. They have morning meetings, 7 a.m. Everyone sits in a room, and somebody older and wiser who's done the research tells us what's going on, or another office that was actually awake on the other side of the world instead of catching us up. That's usually what happens, and that's always my goal for you here. So you walk away from this better informed and better skilled and better understanding of the market than everybody else there. Who's the naughty one who put a 69 in the chat, huh? You are very naughty. All right, then let's jump straight into it. So first of all, what the heck happened even before the GDP numbers came in? Well, SMCI made an unusual announcement saying earnings aren't out for a little while, about a week. But we're revising down our guidance. So previously, they wanted to make net sales of about 5 to 6 billion. Now it's only 4.5 and a bit. And they wanted basically profit per share to be in the 46 to 62 range. Now it's 29 to 31. That, of course, causes some serious pain, and they're pretty disappointing numbers from SMCI here. This is what Goldman Sachs is going to say about it. The bankers with a big fuzzy heart, they just keep kittens in the office. They run rescue sanctuaries. They're very kind people. I'm sure there's some lovely people in Goldman Sachs. Actually, one of my mentors is from Goldman Sachs. He's a great guy. So he's saying SMCI should trade lower on the negative pre-announcement, which includes a revenue miss. Why? Higher inventories reserve on old products. And they're basically saying there are decision delays and margin pressures. So their big customers are going, we might just do this a quarter later. And can you make it cheaper? And that's, of course, not a good sign for the sector. It's getting more competitive in the chip sector. And if you've been paying attention, I've been saying for at least 2 or 3 weeks, stay away from semiconductor stocks, right? And hopefully some of you have looked into that a bit more. So this is the Goldman Sachs rating here. It's now a sell. They're saying run, 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 run. They think it's going to go down another 25%. So semiconductors, even though they had a pretty impressive rally the last 6 days, are definitely not something we want to be buying right now. Now, let me show you a very quick stock shot on that. This is the pre-market loveliness here this morning. But if you look at SOX, which is the semiconductor sector, what do you see here? Well, you see a pretty sweet little rally up here, right? Pretty impressive, especially the last 6 days were very impressive. And nothing goes up in a straight line. So it's going down a little bit. It's not the end of the world. It's actually doing reasonably well today, given the SMCI news there and what just came out. So definitely not a buy for the reasons that a lot of you who watched the masterclass are already understanding, right? How many fails can you see on this chart here? Well, there is that fail, there is this fail, there is that fail. Yesterday's candle was a big fail. I don't know what happened to my volume here. Anybody know what happened to my volume? Somebody ate my volume. I'll hit the refresh button. Maybe it'll come back. So yeah, big warning, bigly warning, even on semiconductors, my friends. Now, the second thing I wanted to walk you through was the job shock. And what is the job shock? Well, first of all, yes, go and learn so you actually know what to buy. Seriously, before you buy a single stock today or this week, if you would just give yourself 15 minutes and actually learn the rules that the most successful investors in the world follow. I didn't make them up. No, I learned them from my mentors who'd learned them from their mentors. And they go back to about the 1970s, the late 1970s, when people really started to figure out how to make money in the stock market properly. And you can learn them. They're free. And one of the things they'll do for you is you will, this is my promise to you, you will never, ever lose bigly again. Why? Because it's avoidable. Those 30, 40, 50, 60, 70% losses that you've been accumulating over time because you had conviction, they're avoidable. And the professional investors don't have those. And you don't have to have them either. Winston doesn't have them. That's why he sleeps so sweetly, right? There he is. He just opened his eyes because I said his name. Winston. There we go. See? It works. Now, while you do that, and let me know, honestly, if you are going to go and watch the little masterclass here at felixfriends.org/get free, just put an M in the chat and, Winston will pay attention. Won't you, Winston? There he is, stretching out quite nicely. He's like sighing because you haven't watched it yet. Put an M in the chat, and I know that you're actually going to watch it. You're going to get sick of winning so much. Absolutely. Now, jobs data, right? Sick of winning. We'll get to that in a second. ADP, which is a private company, by the way, ADP, which I actually own shares in, that, at least I think I do, that puts out jobs data. Now, you can't fake the private sector data as much as the public sector data, so that's why I like looking at the ADP data there. And look at all the M's there. Moonlight and Ryan and Charles and Badger and Stepan and Boster and Empire and Scott and Mike and Teresa and Moonlight and Alexander and Slew and more Mikes and more Teresas and more Jameses. Brilliant, guys. Ball slower there as well. Keep learning, guys. That's really what this is all about. It's all about putting skills between the ears. It's not some sort of magic thing that you get good at. You just have to be given the rules. Like any game you play, basically, you're going to lose if you don't know the rules. Like try playing football if you don't know which direction to run it, right? Won't work very well, right? Or baseball, and you're like, why are they all running around in a circle, right? If you don't understand it, you're definitely going to lose. So learn the rules. So ADP is just put out their jobs data, and it's not exactly bigly. It's very low. It's the lowest we've had since the July 2024 dip, and it's sort of screaming, well, the economy might be slowing to a halt. But there is actually a little bit more to that, and that is, let me show you. Here we go. If you go into Trade Vision, which is the platform we built, and get yourself a free trial to that. Android app just out as well. Android and iOS app are now out for Trade Vision. Just search for it and look for that big, bright, yellow, shiny logo that we have. Can you see that logo here? That's the one. That's our Trade Vision app there. If you subscribe on the website of tradevision.io, you get the apps for free, by the way. And I think that works out cheaper than paying Apple their 30% toll. So please sign up on tradevision.io rather than in the App Store. You can, of course, if you want to, but I think it comes in cheaper for you guys. So what have we got? Well, look, we have the ADP jobs data here, right? Horrible numbers, 85,000 less than expected. But is it horrible? Is it actually horrible? Think that through. What does it mean if the economy is slowing down? Isn't there somebody in the Federal Reserve sort of swigging, whiskey or something, probably sherry, actually, knowing Jerome, the Powell? And isn't he saying that he would only cut rates if the market, the jobs market, is going to slow down, right? I think that's what he's saying, right? So let me show you, we'll jump through this chart for a second. These are rate cut expectations. We're now at 4 rate cuts for the year. Now that might go a little higher today, and we're going to look at that live data in a second as well, but that's the number I'm watching. That's a big one to watch. Now, going back to more data, what else have we got? Well, everyone's freaking out about this GDP growth rate. Came in at minus 0.3%, recession, panic, right? That kind of thing. bollocks. All right? Read below the headline because obviously mainstream media doesn't know how to read beneath the headline. But we're expecting that to come in at about 0.5% plus. It came in at negative 0.3. Now, here is a lesson in data fudging. Okay, so this bar here on the right isn't some sort of LGBTQ sort of parade flag, although it looks a little bit like it. It identifies itself as a recession, but it isn't one, let's face it, right? If it's got a penis, it's not a, you know what I'm saying. Anyway, I'm digressing slightly. One of the things that goes into GDP data is this. It's exports minus imports. So when imports go up, GDP goes down. Now, could you think of a reason why American companies have been importing this quarter like never before? Because somebody went into the White House and said, we're going to put hundreds of % of tariffs on everything. So if you're an importer, you're thinking, well, let's stock up, right? Somebody was on here yesterday who said, I'm glad you're getting some smiles there. No one's going mad yet on the, gender confused crowd. Literally, this is, should I say this? I probably shouldn't say this, right? I shouldn't say this. No, I shouldn't say this. I'll probably get banned. I won't say this. It's a funny YouTube-related story. Maybe you'll get out of me a little later. Someone said yesterday that they were in Costco, and apparently not just the shelves are full of stuff, but the aisles are full of stuff, and that's in the shops. It's not in their warehouses. So obviously companies are stocking up on stuff to make sure they've got the goods at lower costs. So that's why we are in a recession, technically. The second part, and this is really curious and curiouser, this is Doge at work. And maybe you hate the whole Doge thing. Maybe you think Elon's a Nazi and maybe you're a little bit retarded or just slow. But ultimately, that's a reference to the Elon being a Nazi. It's okay if you don't like Doge. Maybe you like big government and lots of wasteful spending. That's all okay. But the Nazi bit is just moronic. Now, that little orange bit down there, that is government expenditure falling. And that's a difficult concept to comprehend for most people nowadays. It means the government is spending less money, right? Which is what the whole Doge thing is doing. So, not to say supposed to say retarded anymore, but what is it? Special? Or what's the new word? Special? Just sort of common sense challenged. Is that what we call them now? Just nutters. I had a nutter this morning in the comments. What was he saying? Oh yeah, this was so I put out a 6-hour investing course, the full bloody thing. I used to sell that thing for $1,500 or something, and I decided I think everybody should have access to it. I gave it for free. Give it for free. It's on the YouTube channel under the educational videos. It's 6 hours long. So someone goes on and says, 6 hours, seriously? And then some expletives, and then says something like, this feels like an ego trip. I'm like, I don't even know what to say to that. I honestly have no idea what to say to that. So I wrote a few comments, I deleted them, and then I just gave up. So I don't really know what to do with people like that. They are special, right? Or was it retarded? Special kind of stupid. Yeah, special needs, that sort of thing. So this is not a recession, my friends. This is the US economy and the US companies being so confident that they're importing loads of stuff. And given that the dollar is falling, they're going to be exporting more as well. And it's a government that is actually cutting back on expenditure, which is just fine with me, because I think governments tend to waste all of our money. And I do pay some US taxes, not a lot, but some. So Corey says, I watched it, all 6 hours of it. It was fabulous. I'm glad you value all of it. And I appreciate, many of you are getting value out of it. Like, I don't know, 30,000 people have watched it or something. And then, of course, one special person comes along and says, how dare you put out a 6-hour video? It's like, that guy probably goes to work for 6, 8, or 10 hours a day, right? And he doesn't really think that all that time he's there just to make money, and that if he's put a little bit of effort into actually making that money work for him, he might end up as relaxed as Winston, which is surely everybody's goal in life, isn't it? Isn't everyone's goal in life to be Winston? I sort of think so. All right. So now you understood that GDP numbers are fake news, and the economy is actually doing pretty well. Look at investment, right? That's huge up there, right? Change in private in inventories, that's a big one. And personal consumption, okay, that's in fairness coming down quite a bit, personal consumption. But yeah, it's basically just an export job. So that's really why this is a load of nonsense. So we'll look at the rate cuts again just in a second. And then what else did I have on my little list here? Anything else? Sure there's something else. Oh, yes. Little bit of doom and gloom. Why not? So CEO confidence. And that's the guys running these big companies and the guys who decide whether or not to invest, the guys who decide whether to build another factory or not. And their confidence is shaken, not stirred, and it's at pretty low levels. It's at the sort of levels that we saw in lower than COVID. Yeah, seriously, lower than COVID, and 2007 when we went into a great bigly recession. So this, you might agree with them, you might not. You might think the economy is going to be the biggest, most beautiful, shiny thing in the world. But the fact that these guys believe it means the market believes it, and it means stocks will have a tough time going up in the medium term. So we need to remove all these unknowns, all these obstacles, the tariff thing, the tax cuts, the immigration stuff, all that stuff that Trump is sort of uphealing needs to be resolved for the market to regain its confidence. And if they don't, you will actually very likely go into a recession. Now, is a recession a terrible thing for you and me? Well, obviously, on a personal level, it affects some people, and I don't wish that upon people. But if you're just a cold heart investor, then actually you're going to get rate cuts, which means if you have a little bit of a time horizon, probably all your tech stocks are going to start flying off the shelf. Not immediately. Everything goes down immediately. And then, it should get a lot better. Lutnik says they're going to encourage factory building and so on, equipment investing. Yeah, and I mean, look at SMCI, right? They literally just started building another factory in Arizona. They started it within hours. I think 2 hours after they got the permit, they started digging the hole. So the speed at which some of these companies, the urgency they have is definitely new and it's definitely bullish. But we're in a significant period of uncertainty here, and you want to bear that in mind. I'm not one of those who just sticks my head in the sand and says, I'm right, I'm going to invest on what I think is going to happen. No, I don't really take that into consideration very much. I just look at what's everyone doing, what's going up. If it's going up, I'm buying it. That's pretty much it. Like I just like to buy stuff that goes up. It's pretty much my investment philosophy in one sentence. And it's not just my philosophy, it's the philosophy of all of my mentors who basically just keep saying, we only buy things if they go up. So we don't buy things if they go down. So let's have a quick look at a couple of stocks here. We have a couple of minutes before the market opens here. Rate cuts take 12 months to work. Nathan, you're completely right on that, but not in the stock market, only in the real world, right? So there are two worlds. There is one where you have people working hard and creating things and building stuff, and those guys, it takes 12 to 18 months for interest rates to benefit them when they come down. But you and me, we don't make anything. We don't do anything useful. We just make money that we already take money we already have and we move it around between different stocks. That doesn't really generate anything useful other than wealth for ourselves, but it also doesn't harm anything. So it's a very, very easy way to run a business, which is just a money business. And because the market's forward-looking, if rates go down immediately, those tech stocks, those growth stocks are actually going to benefit in terms of valuations. So there'll be a little bit of a delay thinking like, well, how bad is this recession? How low is it going to go? And that sort of thing. But then hopefully we're going to get tax cuts kicking in. We're promised them, or the target at least is 7th of July, which is earlier than September, which is what I was thinking. So if they get the tax cuts in by 7th of July, if they get just one major trade deal in, and India is the obvious one, right? India is a close US ally. India is a country that is insanely protective. Like you can't really import, sell anything to India without having to pay massive duties, 100% plus. And India is the big beneficiary here because the carrot that the US is dangling is saying, you'll be our next manufacturing hub. Because obviously plenty of labor and relatively low costs. It's a pretty well organized country and they know how to do stuff. So that makes a lot of sense. So if India caves in on tariffs and becomes, gets to manufacture all the iPhones and all the computers and all the Teslas and all that stuff, then that's a pretty good deal for India because they get a lot of jobs, they get a lot of investment. And in return, the US kind of solves a lot of its problem in terms of longer term manufacturing, because until we get robots at scale, the US can't make everything. It just isn't going to be immediately feasible, right? The penguins might cave in first. Yeah, that's true. The penguins might cave in first to say, if you're threatening to warm up the ice. So yeah, this is pre-market, not looking particularly wonderful. Tesla down 4%, Nvidia down 4%. This is just a little bit of jitters around this recession that I literally just showed you isn't a real thing. Now, mainstream media isn't going to realize that, because mainstream media is, a bunch of loons mostly, or, paid for or whatever. But yeah, they don't realize that the reason the economy shrunk is because American companies imported more, which is an odd thing to think about. Like, why would companies import more if they thought the economy was really bad? So the economy isn't that bad. This recession thing is a load of BS. So let's have a quick look then at some of our, the big winner yesterday was HIMS, up 23%. It's down 2.4% this morning. And let me look at some of our key stocks here. And as you can see on the watch list here, these are pre-market numbers here. They're live, by the way, in Trade Vision, if you want to get yourself access to that. And you can also see these numbers now changing live, right? Like second by second. And you can see that here in red and green and in that column. So the VIX is up almost 10% this morning, which is just a bit of fear-inducing this morning. And all the major stocks are down between sort of 1% and 4%. SoFi is down 4%, makes very little sense if you watch the earnings, and I'll put out a video on that later. They were pretty extraordinary, really, with one exception, which is the tech platform. Everything else is pretty great. So are we buying HIMS here? Well, the problem is it fails one of my tests. And what is that test? And I didn't display the pre-market screen. There it is, pre-market, right? You see that, guys? See that? See the misery I've just induced? Whoever asked for that, he's to blame for the negativity that you've just unleashed. So this 50-day moving average line here, I was excited that we were trading above that. Right now, we were a little bit below it. I'm not loving that. There's a decent chance we might rebound a bit today if people actually, when the grown-ups wake up and they're kind of going, this isn't a recession. People just imported more goods. What are you guys talking about? Then maybe we'll rebound a little bit today. That's kind of what I'm hoping for. NVDA, hope, by the way, is not something that I act upon. just to make that very clear. Hope is not a strategy. Rules are a strategy. If you want to learn the rules, they are down below at felixfriends.org/get-free. You'll learn what we buy, where we buy it, and where we sell it. It's very simple. That's really all it is. It's just like, where do we buy it? Where do we sell it? And you have rules in that. And you have those rules written out and you apply this to everything. And I've got, 30 stocks or something I've got in my portfolio right now. Every single one of those has a stop loss. Every single one, without fail. That's how I make sure I never have a big loss. And it means that I sleep well. I sleep almost as well as Winston does. There he is. And it just means that couple of percent down on the stock doesn't really matter, because the next one might be up 20, 30, 40%, right? MSTR, someone's shouting out. Feel free to shout out some stocks. I'll try my best to look at those. Yeah, that's still a very, very nice rally there. Pulling back a little bit, but sort of irrelevant. We're above the recent high. We're above all the moving average lines. Earnings obviously coming up. They bought a bunch more Bitcoin yesterday. So yeah, I'm liking this. This is a classic sort of move up. Volume could be better, but it's one of those markets where there isn't really a lot of volume. SoFi is inexplicably dumping this morning. Now, I did warn you that it does that a lot on earnings. Where was the last one I did that? Here, for example. No, that was where it just dumped straight away, but it's done this quite a few times. You see, like here, for example, in January last year, we gap up and then we come back down and we lose the whole thing. It's a weird thing. I think it's just people are trading it. If you look at the volume yesterday, there's a lot of trading there. That sort of screams to me, given that the stock did nothing, that sort of screams hedge funds to me. You can also look in the dark pools, by the way, if you want to see. There's some interesting stuff here on HIMS. A video's coming out on that later, but we can have a look at SoFi as well. And that can sometimes give us a bit of a clue about what the big guys are doing. No big trades. And I mean, I only typically look at the large ones. What about sort of mid-sized ones? Yeah, there was a fair bit yesterday. Nothing massively unusual. There's a fair bit of bearishness here. So I think just people trading it, letting it run up, moving it back down, making money out of it. But the numbers were good. So I think in the long term, this is a good one. But we'll see where it gets to. Does declining volume in SPY concern you? Well, if it's going up and the volume declines, absolutely more. And it is one of those things that we look at. It's you get a rally, right? And your volume declines. It's kind of telling you your rally is losing steam. You're likely going to go either sideways or start coming back down again. So it's just a couple of those rules. It's really not that hard. And, you're suddenly looking at the market through like a whole different kind of matrix. With carrier imports being dramatically lower in May, does that not add to the recession narrative, says Sean? Not necessarily. Well, if they imported everything in January, February, March, right, then they're going to have to import less in May. And that was kind of the plan, right? Like, let's front load the imports. And those are mostly China imports, right? And the whole purpose of the tariffs is to literally rejig that supply chain. Now, I haven't looked at whether those containers are going to Mexico and then going from Mexico to the US or something. Obviously, there are tariffs there too, but new routes will find their way. Doesn't necessarily scream recession. It screams supply chain changes for sure, but it doesn't scream recession to me. No, because there's a lot of inventory in the US right now. SMCI dealt with me yesterday. Oh, sorry about that, my friend. Where do you see SoFi in 5 to 10 years? Absolutely no idea. For me, if they keep executing as they are, if Notice sticks around, I think likely they will hit their goals of being one of the major US banks. I think that's really the goal. Given that they added another, 800,000 people last quarter to their membership, and they're now at 11 million people that are using that, you can kind of see that they could actually get there. Hood. And I appreciate the German greetings there from the fellow Germans. Yeah, it's what's the problem with the chart? Again, you guys who've watched the masterclass, or the guys who are my students, you know what the problem is, right? You see this yellow line there? Where is it going? Is it going up? Is it going sideways, or is it going down? Put it in the chat. Put it in the chat. Where is it going? Up, sideways, or down? It's not a trick question. And when it starts to flatten out, like it did up here, what do? We get very, very, very concerned, and we move our stops a little tighter because we're smart. That's how we don't lose money, which meant that we could have gotten out. Actually, we should have definitely gotten out there. Actually, we should not have been in that. We should have definitely gotten out sort of over here. And that would have meant that since March, we would have not have been in Robinhood. But do I think it's a good business? Yes. Do I think their earnings were going to be good? I expect so, but it doesn't mean they necessarily will be. So I'm not going to take a gamble on that. The drop here this morning is likely has nothing to do with Robinhood and everything to do with the noise and the FUD out there right now. Who says sideways? No, it's going down. It's going down. Gold or Barrick gold. I mean, gold's gold. Basically, I keep nibbling on gold. I'm hoping for more gold pullbacks, to be honest with you, because it's still a little extended. There is the gold chart. So at the moment we are, we gapped up, a lot, right? Once, twice, 3 times, 4 times, 5 times a lady. And then we gapped down here once. And since then we've been basically zigzagging sideways, and that's okay. I'm still a gold bull, but as we're going sideways, we're losing steam. So the market's trying to figure out direction. So what do you do in a moment like that? You wait. It's very simple. You wait. If it breaks out again, so if it hits, 2 approaches to this, either you buy it when it breaks out, or you say, look, the gold rally is going to keep going. And then, if we go back into maybe the sort of 290 zone here, maybe we start nibbling on that as well. That's also a reasonable thing to do, just a little bit more of an advanced way of looking at that. Shorting gold soon. Yeah, I really wouldn't do that. Really wouldn't do that, my friend, but it's up to you. Which ticker do you buy for gold? I actually buy a bunch of different gold companies. I don't buy gold itself. because I think I quite like the earnings aspect. And I think those companies disproportionately benefit. And there's quite a few of them that are looking quite sweet. The market's open. All right, let's abuse our terrible bell. Here's our terrible bell. The big bell is apparently still on its way somewhere. We're hoping to get it sometime soon. If we look at the market here, volatility, the VIX, the fear is up bigly today. A major achievement of about 9.8% up this morning. Now, the whole story seems to be around the loons who run mainstream media. US economy contracts for first time since 2022. At least they added on import surge. So hats off Bloomberg. You didn't write complete nonsense despite your loathing for the current administration. But you combine that with the smallest gain in jobs since last July, you can paint a picture that screams recession. It's nonsense, of course, because it's just imports. Like, it's just nonsense. So the in GDP actually is doing pretty well. It's just the imports surged massively because companies were front-loading their import requirements, and imports reduce GDP, which kind of makes no sense, but it's just one of those weird economic things. So why didn't you buy Goldman as at a 52-week low? How did you know that I didn't? Only gold to own is gold in your hand. Yeah, that's a very different thing. I agree with you on that. I think it's good to own some physical gold, but that's not what I'm talking about here. I'm talking about just trading something that makes us money. I'm not talking about hold the stuff in case the world ends, right? Which is a bit of a different thing. Now, any stocks you want me to look at? Anything at all? Perhaps the delightful Tesla that's down 5%, or the delightful SoFi or Arch that are both down 5%. And suddenly everyone's going, oh no, it's a bear market again. Yeah, we were always in a bear market. We never got out of it. We were just experiencing a little bit of a pullback. And I've been saying to you guys for the last couple of weeks, be careful, be cautious. This is not a rally, especially tech's going to get hit pretty hard today. Do I think it's over? No, I also don't think it's over. I also don't think this is that bad, because I don't think we're going to retest the recent lows. I mean, I don't think we're going to get the NASDAQ, the QQQ back to 400 anytime soon. So if we just sputter around here a little bit, there is absolutely nothing wrong with that, considering all the madness that the world is throwing at us. Now, one other piece of madness, of course, is that there are almost 4,000 of you here, and only about 10% found the like button, which makes me slightly concerned for your ability to press the button, or maybe you just really, really dislike the content. Maybe Winston will make you want to press the button. Winston, what do you think? Winston, hey. Winston, hey. Nah, he's not going to look up, is he? So there go the likes. Can we close the market for 6 months and try again? That might be that'll be pretty boring, wouldn't it? Because we can make a lot of money in the meantime. So I'm quite enjoying the up and down here. 10% on 001. Steve just pressed the like button. I appreciate you, Steve. Actually, we got an extra 200 likes there, which is kind of you guys. Appreciate it. Thank you very much. If you're going to do something for yourself, even here, actually learn the rules. Rather than watching me blabbering on and waiting for me to walk me through, you through, you know, whatever the stock it is that you want me to look at, then you could just do it yourself. Because the rules are so much simpler than you think. And once you start learning them, which you can do in literally 15 minutes, you will be safer, you'll sleep better, you'll look better, you'll be richer, you will, have golden retrievers surrounding you, that sort of thing. But in all seriousness, it'll mean you'll never lose big again. And it also means you're going to start picking much better stocks, most likely. So check it out. The link is down below, felixfriends.org/get-free. I can even do this. I make it very easy for you. I'll put the link in the chat here for you, and you can just click on that. That's how simple it is. You don't even need to type. Lol, I did follow the rules. I'm 14 out of 15 green, says Stephen. There you go. See, it works, Stephen, doesn't it? It's kind of magic, isn't it? You're kind of thinking like, why doesn't everybody know this? Isn't that what you're thinking? Like when I first got taught this, I was like, why do people, and now I just look at things and I just go, why are people buying that? I just don't understand it. Or, I watch, somebody's video, I shan't mention names, who say like, oh, buy this, and I'm like, but why? I just don't understand. I don't comprehend. Is it some sort of weird desire for pain? Is it a sort of a sadomas, what is it called? S&M thing or something where you want to just like, have pain inflicted upon you? I just don't really understand why people want to buy stuff like that. I mean, Intel is another one. People saying, oh, buy Intel, it's cheap. No, don't buy Intel. It's a freaking disaster. So it's just, actually that looks a lot better than AMD if you ask me, but it's still a freaking disaster. Now, discount day today. Yeah, it's a discount day again. Archer, it's actually looking still reasonably good. I mean, it's still above the 50-day moving average line. But you see the yellow line here? That's the 50-day moving average line. And which way is it going? Is it up? Is it going sideways? Is it going down? Yep. Gold stars to all of you, because that little line there is the 50-day moving average line, and it is going down. And when it's going down, what do? We don't buy the stock. At least that's mine and Winston's rule, which is, how we are so happy. S&M is a German thing, is it? Well, I wouldn't know. I left the country when I was 15, never been back. Blame the other Germans in the chat here for that one. What about Palantir? I mean, should Palantir stock go down because people imported more goods into the US? Does that make a lot of sense to you? Doesn't really, does it? And, well, it's only down 3.7%, gap down, and it's actually moving up intraday here. So it gapped down with the rest of the market, but it's actually looking fairly decent. I was hoping for a pullback, so I would not be unhappy if this comes back down into the 90s. I'd be very happy to buy it again around that level, but at the moment it's down 3.7%, but looking somewhat optimistic intraday. The UK has M&S, yes, which is also very painful, isn't it? If you think about it. I'm holding my phone upside down. That makes it look good. Yes. Palantir has earnings indeed in a couple of days. I keep buying. I'm breaking all the rules. Oh dear. Archer's in a risky industry. Light aircraft. I wouldn't really say that Archer is in the light aircraft industry. I would say they're more in the kind of eVTOL / sort of industry, which is a very different thing, I think. What else have we got? Anything else you want us to look at? AEM, Agnico Eagle Mines Limited. That still looks pretty decent, doesn't it? Why? Because, well, it's above the 50-day moving average line. It's sloping up. There's a little bit of a consolidation there. Volume is fizzling out a little bit here after earnings. Maybe people front ran that a little bit more heavily, but it's still looking decent, right? Nothing to be particularly afraid there, right? Compare that to say, that's what should make you afraid. The other one is the kind of chart you want to look at. What about MP Materials? Well, this hasn't given us the breakout point yet, has it? So it's down in just sort of solidarity with the rest of the market. The market is sort of very strangely communist at times. So solidarity, what's it called? Strasnost or something like that. Yes. So it's just down because everything else is down. But yeah, of course, we wanted to break out above the recent highs here, sort of 28 and above, maybe even 29 and above, and certainly be above that yellow line here before we even think about that. Thank you for Trade Vision, invaluable. Appreciate that. I'm glad you're getting value out of it. The link for that is down below here, by the way. And you guys can also now, if you're a user of Trade Vision, you can get the mobile app for both Android and iOS for free. So sign up on the website, tradevision.io, links down below, or in the chat here. There it is again. And there it is again. I'm going to get blocked for spamming, aren't I? And then you can actually use that. So yeah, I'm really liking it. It looks very cool. Actually, I'll show you if I can. I actually just installed it on both my Apple and my Android phone, if I can find it here. So yeah, it looks like that sort of thing, which is cool. Got the charts in there. We've got all the alerts in there and trends and stuff. All the alerts are coming up So yeah, very, very cool. We're also going to put a lot more features in there. We're working really hard on that. We literally just hired an extra developer just to work purely on mobile to make sure all the cool features that we keep releasing every week on the desktop version come out to you into the mobile version as well. So Denise says, I would never ever made a trade without having trade vision in your masterclass. Appreciate that. I'm glad it's giving you value. Denise, thanks for sharing that. If you want to watch the masterclass like Denise has as well, chaps and ladies, apparently there are more of you nowadays, then I'm less successfully repelling you, then check out felixfriends.org/get free down below. Now, any questions you want to ask me? Can you cancel the free trial of Trade Vision after the week? No, it's bondage. It's like you and your offspring for eternity will have to, yeah, of course you can bloody cancel it. There's just a cancel button in the settings and you can just cancel it. We make that very easy for you. Now, are you buying anything today? I set up my buys on Sunday or on Monday morning, and then they just sort of do their thing. So they're rules, and they say only buy at certain levels. And then they close themselves also at certain levels. So I typically don't do anything during the week. I literally don't do anything at all. I just glance at it every once in a while because I feel like it, not because I'm actually doing anything. So no, I'm just sitting on my hands. That's what I do most of the time. And it's a wonderful feeling. You know, you don't have to do anything. It's really, really nice. Would you buy Coca-Cola after today's open? Well, you know, that was the clearer entry point because we closed higher than we closed ever before, down a little bit here. So, you know, there is always a second sort of opportunity. It depends a little bit on your fundamental view on Coca-Cola. I happen to quite like the sector right now, and I happen to quite like the stock within it. It's a consumer staple. Come what may, even if we do get a massive recession, people will still drink Coca-Cola and Bon Aqua and all the other poisonous rubbish that they sell. So that's why I like it. It's a defensive stock. It's one of those. And then there are a couple of them out there. There is Dr. Pepper, which, you know, similar sort of setup. I also, Celsius is also one I like, kind of treading water here, but, you know, if it breaks out again above sort of 38 in a bit, that could be interesting. So yeah, there's a lot of good stocks that we can buy right now and we can potentially make a lot of money out of. So liking it. What broker do you use? I use mostly Thinkorswim. I do have a couple of others, but I use mostly Thinkorswim for the more active stuff. Is Mealy topping out? Good question. Let's have a look. I think we're breaking Trade Vision again here. By the way, we're migrating Trade Vision onto a Google Cloud server, which will give us the ability to scale like infinitely, which is very, very cool. So that's happening over the guys have already started on it. That's happening over the next couple of days. So any lag issues will be gone by hopefully this time next week. Mercado Libre, is it? Well, it's pretty good, isn't it? I mean, it's below yesterday's low. Wouldn't really worry about that too much personally. The high is a little lower than the previous, that one here. That's really sort of the only thing that I see, but it looks pretty good so far. Everything's pointing up. I'm not particularly concerned about it. That doesn't mean that you shouldn't be. You need to have a stop. You need to have an exit rule. That's what I would suggest. What Coca-Cola stock? There are a bunch of them. So what I just showed you was ticker KO. There is also KOF, which I believe is the Mexican one. There is it KOE or something? What's the European one? The KOF is Mexico. And then there is also a European one. I personally like them all, but that doesn't mean you need to buy them. You need to don't just buy stuff because somebody talks about it. Like if you do that, you're going to keep losing money. You're going to have a really, really hard life. If you actually think about this, with any business, and your portfolio is a business, you need a business plan. If you don't have a business plan, you don't know what you're doing, you don't know why you're doing it, you don't know who you're selling it to, you don't know why you're making it, you don't know anything. You're just like running around, you're just busy. And busy usually achieves nothing. So you want to have rules, and you want to have written down rules, and you want to look at them before you make any decisions so that you go, that makes sense. That doesn't make sense. This is the point I'm buying it at. This is the point I'm selling it at. And you want to automate that. That's the only way I know that successful investors make money, right? That's really what it's all about. You see, Winston just woke up. What's going on, Winston? I think someone is just next door. Rules, apply them. Yeah, indeed. Are you looking at cybersecurity? Yeah, I think that's a good sector for sure. I thought, did we have a watch list in here for cybersecurity? Let me have a look. Okay, Trade Vision is a little on the slow side right now. Give me some names, and I'll gladly have a look at them. Is it worthwhile learning VWAP charts? It's pretty. I mean, that's, I think, probably one of the real reasons people like it. It's very pretty, VWAP charts. There's a little bit of utility in it. I don't think there is that much utility in it. I think if you want something really useful, provided you're in liquid names, look at the actual, if I'm allowed, I'm not allowed, am I? Look at the actual market positioning, and you can see that here if that support line worked right now. I think everybody's logging onto Trade Vision, and it's straining our servers a little bit. As I said, we're migrating, so we're going to have that problem fixed for you guys in a few days. How come Winston never barks? He doesn't bark. Why would he bark? Not in the house. No. I mean, he barks when he plays and he's excited, but in the house, he doesn't. No, he's a very well-behaved boy. Also, we have quite a few cats. They don't really appreciate him being noisy. So we've always taught him when you're in the house, you're chilled. When you're outside, you're a wild creature, and he kind of accepted that. Okay, my stock chart's broken, so we're going to have to resume that tomorrow. Another reason for you just to go and learn the rules. That's really what I would recommend. So the link is down below at felixschwenzer.org/get-free, and you can actually do exactly what I do. It really isn't rocket science. It's really one of the simpler things in life. One of the reasons we're in Netflix is because it's a beautiful freaking setup that ticked all the boxes, right? Really ticked all the boxes. So that's why we're in that, and that's why that's making me money. How old is Winston? Good question. I think Winston's about 7 or something like that. We adopted him, so I'm never quite sure. I'm not really into the whole age thing, because people always think then, oh, when you get a certain age, you're no longer, fit or something. He's like a 2-year-old. He's like a puppy. He's really full of energy. So I think it's just about exercise, good food, and just obviously general happiness. And this chap is generally pretty happy. We're going to go outside now, actually, into the park and play with this guy. So on that note, I love you for tuning in. I love you for wanting to learn. Go to felixschwenzer.org/get-free. Do yourself a favor. And I wish you a big, beautiful, shiny day. And don't let the noise of this recession thing get into your head. You make your own economy. I always have the best times in recessions because everyone else is just sitting on the sidelines. The opportunities are tremendous, both as an investor and just generally in life. And if you look at it that way, that you're in charge, you control things, then life's going to be a lot better, a lot easier.